Working a 9 to 5 job means that you will not be able to really catch all the moves in the market during the day, right? And to an extent or to some certain degree, it hurts, right? But then again, you're not meant to catch all the moves in the market. You are just meant to catch the right moves, right? The ones that make sense to you, because even the day traders lose money, right? And I'm not saying that swing traders don't also lose trades, no, but I'm just saying if you are working 9 to 5, sometimes you would not be able to catch all the trades you want to. So in this video, I just want to show you a very, very simple way to actually get past that simple hurdle. That is something that will help you to catch trades easily. Right, so this trade right here, I do not have a screenshot of the before because I just set it and just let it just ride. But then again, too bad that my broker did not fill me in, right? As you can see, price tagged me in, but my broker did not fill me in. So I don't know. So it's just one of those trades that wasn't just did not just happen. And as you can see, this is around a almost 5 hour trade. Right, so I just set it up at night and left it to ride. So this is how I came about this thing. So first and foremost, let's go to the daily time frame because this happened on Monday. So let's go to the daily time frame and see what's going on there. Right, now the overall trend direction, right, we have been quite bullish, right? It has been bullish. Now, but for the few days before this trade, right, we had 2 consecutive days of bearish moves, right? But then again, something happened. Something very interesting happened. If you see here, this particular area, we had a sweep of a QM, right? So we had a sweep there. So that's a key level, right? And it was broken twice. So this is a QM. So and it was swept, right? So I saw that happened. Then I was like, okay, I got serious. Though this particular area, the last red line is the place I am really expecting markets to come back to before I get a push to the upside. That is, I'm looking to buy from this zone marked that I'm actually presently clicking, right? So, but I saw that initial sweep and I was like, okay, the markets will probably react a bit and move upward, then still trade downward. And as you can see, that's what is going on here. So that happened. That sweep happened, I think on Thursday. Yes, that's on Thursday. Right, then I waited. On Friday, I did not get a good entry. I was like, okay, no problems. But I still knew that market was still going somewhere up around here. So now, many cases when I'm marking my PO, I am also marking my exit points, right? So that is how I usually trade. And as a trader who is not always present in the chart, when you are looking for your POI, that is the place where it makes sense to you to enter from or to buy from or sell, you should also be looking at your exit points and which place made sense to me. This was the area that made sense to me, because market broke this particular key level here, right? Market broke it, then sold down. So logically, we expect market to trade back up to that point before it could to actually grab liquidity of that area, then trade continues downward trajectory, right? So that was what I pictured. Now after that sweep, then let's move to the 4 hours. So the most important thing, when you know your direction probably in the daily time frame, then you can probably go to the 4 hour time frame to see the fractal structure of the 4 hour trend, right? But though I don't take my entries from 4 hours, but it's just to actually see what the 4 hours is seeing. Right? Now from here, let me take out this one because I don't want to mark out too many places on the chart. Right? So in this particular area now, I saw that markets started trading upward, and this was on Friday. right? So I saw that market actually, if you watch, there was a break. There was a slight break, or probably maybe not, but I saw something that made me say, okay, let me try this one out. So if we see here, yes, that was a break. This was that area broke that particular key level, right? And that was Friday. So I saw that particular shift in market structures, or let's say chalk. So I knew that okay, market wants to go to the other side of the market. Sorry, price wants to trade to the other side of the market. And where is the first place that market will react from? Before, right? So, and I marked this place out. I marked here out as my liquidity, right? So this was my liquidity. I marked out. Now, where is the next key level that makes sense? Where price could trade from? Right? The next key level that price could trade from is this particular QM here, right? Because why? Market broke once, broke twice, then right. This was where I said, okay, market could trade from. And also, this is an open close here, right? This is an open close, right? So I was like, okay, as you can see, one thing you could do is just firstly you should know your direction. Then secondly, you should mark out the key levels where you think price could trade into, right? Then move to the 15 minutes. Move to the 15 minutes. Let's see what the 15 minutes time frame has. So in here, we'll see something. Now you'd be saying, okay, why did I put my entry even below the QM and also below the open close that I saw on the 4-hour time frame? Now that's where the refinement comes in. That is yeah, we refine the entries, right? So now from here we can see one thing. We can see that there is a key level here, right? So this was the key level I used because I was like, I don't want price to leave me, that is chasing the apex, or like there were so many key levels. As you can see, there were so many key levels, right? If we start counting the key levels here and on the lower time frame, it's quite much. So when I say that there are too many key levels in the lower time frame, I just stick to the one I see in the higher time frame, right? If we see here, there's a key level here. In fact, there are key levels there. There are key levels again around this zone. Right, so it made no sense to start looking for key levels everywhere. So I just set it there, and as you can see, price came in there, traded into that particular point, and continued moving upward. Right, on the 1-hour time frame as well, you can see it here. So that's the very simplest way to actually trade when you have a 9 to 5. Firstly, mark out know where your market, know the direction of the market. Mostly I use the daily time frame, but if it's a new week, you can probably start from the weekly time frame, right? Know the direction. Then secondly, mark out your POIs in a fractal structure, right? Then look for entries and just set your limit and go about your day, right? But in most cases, put your stop loss at a logical point, so that you know that okay, if price goes beyond this point, then my trade idea is invalidated. There's something I see, many people I see, they tend to use very fast stop losses. And one thing that I discourage is that with big fast stop losses, some people do not know how to do risk management, and they still use the same let's say they trade 1 lot or 2 lots or 0.5 lots. They still use the same on every trade, thereby increasing their risk. So whenever you're trading, you should also take to consideration your stop loss size.